So traditionally, this has been the 3 stocks to buy monthly series on the channel. But you know what? It's December, holidays are around the corner. I'm going to share with you 7 undervalued stocks here in this video. And no, these are not stocks with some poor fundamentals, extreme speculation, gamble type stocks. No. These are reputable companies for the most part, and they have strong fundamentals backing them up for the most part. And I think the market has just kind of discounted them right now, pushed them off to the side. And because of that, I think we have an undervalued opportunity on our hands here. So guys, smash the like button for the YouTube algorithm. Helps the channel out tremendously. If you haven't subscribed, hit that subscribe button down below. About half of you guys watching are not subscribers. What's going on? Hit that subscribe button for more videos like this. And as always, I've taken feedback from you guys, and there are timestamps in the video description to each one of these stocks. So if you want to skip ahead, be my guest. Our first stock here, guys, is SAP for the month of December, and this is a large tech giant in Europe. The stock is down nearly 30% off of its highs, and this came after their most recent earnings, which was underwhelming to investors. Their Q3 sales saw a decline, but we did see cash flow improvements. However, the nail in the coffin was the lowered guidance. So here's the deal with SAP. They're a pretty old business, and because of that, they have a very large customer base. They've been around for a long time, they operate pretty much on a global scale, and if you're working at a corporate company, chances are you've probably used some of SAP's products. So because of this massive reach that they have, this could possibly be a very good turnaround play. Right now, the stock is showing some signs of undervalued. Such a big dip in such a large company is something you don't really see too often. So if you have high conviction in this industry that they're in and with their customer base, you think the customers are going to stick through them with this, then this is definitely an opportunity to take advantage of. Now, my personal thoughts is I think that they are big enough to really get through this little bump that they're seeing. And I think, a few years down the road, we're going to look back and say, that was a good buying opportunity in SAP. Looking at their recent revenue and profits, they have been rock solid for the most part with consistent growth. So if you were to ask me, guys, I think that this company is going to get through this. They're going to be just fine. They are kind of a slower, more boring company. They don't move as fast as some of these new tech giants. But I have a hard time seeing this go down much lower than where it is today, unless something drastically changes for the worse. So this is our first stock for December. Number 2 on the list here is 3M. Now, this is a stock I've been beating the drum on for such a long time. I love this company. I've made plenty of videos covering this company, and those of you in my VIP group know how much I love 3M and where it sits in my portfolio. The stock has been downtrending since 2018, which is the first thing most investors notice, and it's currently down over 30%, but I think the bottom for this stock, guys, is in. Now, what you need to understand with 3M is that it's a cyclical stock. It's an industrial stock, so it heavily depends on the economy. When the economy is slowing down, showing signs of contraction, 3M is naturally going to suffer because they can't sell as much. However, on the flip side, when the economy starts booming, recovering, expanding, 3M is one of those giants that just keeps getting bigger. So what we've seen in the last couple of years is 3M kind of trending down, implying, the economy is slowing down, things aren't as good as it was a few years ago. But now, guys, I think, like I said, the bottom is in here for the stock. Things are starting to move up again, which implies to me that it's predicting that the economy is ready for another expansion, another boom, and this massive giant is going to benefit from that. So I'm going to go out on a limb here and say this. I own 3M stock, and I think this stock is actually going to be one of the best performing blue chip stocks over the next 3 to 5 years. I think that a double up on my money is definitely in the cards. I think, 3M has a lot of value that investors are just overlooking right now. But we can see that with this slow recovery that the stock is starting to see, investors are coming to their senses and saying, why haven't we bought this stock yet? And they're scooping up shares as fast as they can. The stock currently sits at $100 billion market cap with consistently strong revenue and profits. And I think that, $250, $300 billion market cap even is not out of the cards for this name. Next up is a pair of stocks here, Altria and Philip Morris, because these are very similar companies in different markets. Altria is a local play here in the US, and Philip Morris is the international play. Now I know this is kind of a controversial pick, not everyone's going to agree with this, and that's completely fine if you feel that way. Feel free to go to the description, skip to number 4 if that's the case. That being said, Altria is down 47% off of its highs a few years ago, and Philip Morris is sitting down there as well, around 37% off of its highs. Both stocks have been beaten down massively because of regulations, and people thinking that their business model is just going to keep shrinking over time. However, if you look at their fundamentals, it's still as strong as ever. These are strong cash flow businesses. They also both pay out a massive healthy dividend that is definitely sustainable, at least in my eyes. So that's another added bonus for holding these stocks here today. Now, I personally hold Altria out of these two picks, but if you want more international exposure, Philip Morris is probably the better bet there. And I think, guys, over the long term, these companies are going to be just fine. They've been adapting and doing things behind the scenes, making big bets and big investments to make sure that their customer base and the future customer base that they're going after actually is able to still come to these brands for a product that they're seeking. Alright, number 4, who doesn't like some jam? JM Smuckers is our next pick, and this one isn't that exciting of a company, but they are looking attractive here. This is kind of a sideways move for a while, down 27% or so, but staying relatively steady while paying a nice dividend. Now, this is kind of a company that I'd say is kind of a safe blue chip company. You're not going to see yourself double, triple your money like this in a stock like this, but it is something where you can put your money into, average it over time, and you probably end up beating the market or kind of averaging out with the market over the long term. I kind of see this as like Kellogg's or Coca-Cola, the stable businesses that just keep producing things that consumers keep consuming. So I don't really see their model going away. I don't really see, a sudden drop in spending from consumers for these brands. I just think that it's gonna keep chugging along. It's gonna be a fine business over time. Now, one thing I've noticed is that this whole sector has kind of been out of favor for a while, right? You have Campbell's Soup, Kellogg's, General Mills, and Smuckers here. And really what investors have been saying is, hey, who cares about these stocks? Tech stocks are where I want to put my money. And that's fine, but eventually we're going to see some sort of rotation. Money's probably going to rotate back into these stocks at some point, and that's when you're going to see them start to boom once again. Again, like I said, these business models are pretty much set for success, guys, unless the way we consume things changes drastically. So I have no concerns with this company at all from an investment perspective. So I'd say if you don't have much exposure to this kind of consumer space here with foods, this is definitely a stock to consider. Kellogg's is probably another one you could possibly look into. But if you're talking about undervalued stocks, this one probably tops the list. So next up, we have a healthcare company, goes by the name of Merck. And if you've noticed, a lot of these companies have been hurting recently. This one is holding up pretty decent. It's still down around 13% off of its highs, but it should definitely be much higher in my opinion. And honestly, guys, the metrics for Merck look pretty solid. Revenue started picking up for this company again, showing growth in the business again. Gross margins are increasing substantially, so this increases the possibility of higher profits. And they also keep buying back their shares, which makes existing shares more and more valuable. Now, there is something to note with Merck here, though. They are currently a $200 billion company, so to see them double to a $400 billion company, it's going to take some time. They are a well-run business. They do keep growing. Those are good signs. But to double in value when you're that size takes a lot of capital. So you just have to keep that expectation there and don't expect this stock to double or triple your money in a few years. That being said, though, I know many of you guys are not really diversified in healthcare stocks at all. I know tech, high growth, SPACs, EVs, these are the stocks that everyone's flooding money into. But I always say you want to have a well-diversified portfolio so that, if some sectors hurt, other sectors do well. And that's kind of where the benefit of diversification comes into play. And if Merck doesn't interest you, maybe look at something like Johnson & Johnson or AbbVie. These are other great companies. Not as good value as Merck, I would say, but still solid businesses nonetheless. If I had to kind of rank these businesses here that I just mentioned, I would say Johnson & Johnson is the clear number 1 player in the space, followed possibly my preference would be AbbVie, and then after that would be Merck. So, if you're looking for one of these 3 stocks, I think Johnson & Johnson is kind of a no-brainer. But if you're looking for the best undervalued play in this sector, Merck is probably a good option. Number 6 is Kimberly-Clark, and it's another staple set and forget type investment to add stability to one's portfolio. The stock is only 11% off of its highs, but you don't get this type of stock on a double-digit dip too often. Now, I see this stock as kind of one of those pure buy the dip opportunity plays. Let me explain why. Their latest earnings is what caused most of the selling, where they posted good numbers and raised guidance, but it was just not as high as analysts were expecting. So guess what? They didn't meet analysts' expectations. Like clockwork, this stock started selling off. Now, my personal opinion, guys, Kimberly-Clark is a great company. I think the products they sell, clearly, as we've seen over the last few months, are essential things that people need in a day-to-day life, whether we're going through this global issue or not. So I think, yeah, this 11% dip may be warranted because the stock has ran up quite big. But if you look at the long-term picture, great company and probably a very good buy the dip opportunity. Alright, so we're finally at number 7 here, and before we reveal number 7, I just want to thank you guys for your support on the channel here. This past year, this 3 stocks to buy series has done extremely well on the channel, and I truly appreciate you guys for that. So without further ado, number 7 is a newer stock that I think a lot of you guys wanted me to talk about. So here it is. Rocket Companies made the list here, and yeah, you may be surprised to see it on this list, but I'm spending some time looking into this one, and I think it looks quite interesting at these prices. Today we're sitting at just about $20 per share, but what's more interesting about this company is the market cap. Many don't realize this, but Rocket is a huge company at a $40 billion market cap after going public recently. Now this year, this company is slated to pull in around $12 billion in revenue, and that puts its price to sales at around a 4. A 4 for a company like this is definitely tempting. You know, when I look at growth companies, I want to see their price sales under 4, under 2 if possible. That would be kind of like a no-brainer buy the dip. But a 4 for a company like Rocket that's well diversified, well established, huge exposure, huge reach, it's starting to look very attractive to me, guys. Now, if you didn't already know, Rocket actually has a few arms to their business with a heavy focus on tech in real estate, mortgage, and financial services. They're essentially trying to disrupt the whole real estate space with technology. Now, I have spent a little bit of time digging into this company, and I'm going to spend a lot more time looking into this because the valuation is definitely something that caught my attention. But I wanted to bring this up to you guys and just kind of let you know, hey, this is a stock that I'm looking at that could be a multi-bagger opportunity if you believe that real estate is going to keep booming over the next few years into the foreseeable future. But that kind of also goes with the risk for this company because it's tied to real estate. If things turn in that market, this stock is going to hurt. Right now though, if I'm being honest, from what I see, it looks like analysts are actually expecting the stock to hurt next year. So if things go better than expected and, the economy recovers, real estate prices keep going higher, and we see interest rates just kind of stabilize and, even if they're low, just remain at that low level, Rocket could be a multi-bagger opportunity. So just keep that in mind. Spend some time doing some due diligence research in there, guys. I'm definitely going to spend some time looking into this company because it is intriguing, and hey, it's a play on real estate. That's a sector that's been hurt massively this year, so could be an opportunity there. So guys, these were the 7 stocks for December 2020. I hope you enjoyed this video. Again, thank you for your support this whole year. I'll see you in 2021 with the usual 3 stocks to buy. But I just want to say, if this is your first time on the channel, subscribe, join the community. We're over 70,000 investors strong here on this channel now. And I'm so glad to have each and every one of you as part of this community. Thank you so much for watching, guys. Don't forget to invest positively, and I'll see you in the next one. Peace.